The stock market is a complex and ever-changing beast. It's a whirlwind of data, news, and emotions, making it difficult to predict its next move. The efficient market hypothesis, EMH, argues that stock prices reflect all available information. This makes it near impossible to consistently beat the market. However, machine learning and AI are changing the game. These technologies provide unprecedented tools and insights. In the following sections, we'll explore how ML and AI are transforming stock trading. Machine learning, a subset of AI, involves training computer algorithms to learn from data and make predictions. Unlike traditional computer programs that follow explicitly programmed rules, machine learning algorithms can adapt and improve their performance over time without human intervention. This ability to learn and adapt makes them incredibly powerful tools for tackling the challenges presented by the EMH. In essence, machine learning algorithms excel at identifying patterns and relationships within vast data sets that would be impossible for humans to process. These patterns can range from subtle correlations between seemingly unrelated assets to complex market trends influenced by a multitude of factors. By recognizing these patterns, ML algorithms can generate valuable insights into market behavior, potentially uncovering opportunities for profit. For instance, imagine an ML algorithm analyzing decades of historical stock data, economic indicators, and even social media sentiment. It might uncover a recurring pattern where certain stocks tend to outperform others in specific economic conditions. Armed with this knowledge, investors can make more informed decisions about when to buy or sell particular stocks, potentially gaining an edge in the market. This ability to sift through massive data sets and extract meaningful insights is where ML truly shines. It allows investors to move beyond the limitations of traditional analysis methods and gain a deeper understanding of market dynamics. In the next section, we'll explore how the speed of these algorithms further amplifies their impact on stock market trading. The modern financial market is awash in data. Every second, a torrent of information from stock prices and trading volumes to news articles and social media posts floods the market. This data deluge presents both an opportunity and a challenge for investors. While it holds valuable insights, the sheer volume makes it impossible for humans to process and act on it in real time. This is where machine learning algorithms have a distinct advantage. They can process and analyze vast amounts of data at incredible speeds, far exceeding human capabilities. This speed is crucial in the fast-paced world of stock trading, where milliseconds can mean the difference between profit and loss. Consider the impact of a breaking news story on a company's stock price. By the time a human trader has read and digested the news, an ML algorithm could have already analyzed it, assessed its potential impact, and executed trades accordingly. This ability to react instantaneously to new information gives ML-powered trading systems a significant edge in capitalizing on short-term market movements. Furthermore, ML algorithms don't suffer from human limitations like fatigue or emotional biases. They can operate continuously, 24/7, analyzing market data and identifying opportunities without the need for breaks or sleep. This unwavering consistency ensures that no potential trading opportunity goes unnoticed, maximizing the chances of profiting from fleeting market inefficiencies. As mentioned earlier, the weak form of the EMH argues that past price data cannot predict future prices. While this holds true to a certain extent, machine learning algorithms are challenging this notion by uncovering hidden patterns within historical data. These patterns, often too subtle for humans to detect, can provide valuable insights into future price movements. For instance, ML algorithms can analyze decades of stock price data, identifying recurring patterns that precede specific market movements. These patterns might involve a particular sequence of price fluctuations, trading volume anomalies, or correlations with other assets. By recognizing these historical patterns, ML algorithms can alert traders to potential opportunities, even if those opportunities are not immediately obvious. Moreover, ML algorithms can analyze unstructured data, such as news articles and social media posts, to identify sentiment and gauge market sentiment towards specific stocks or sectors. This sentiment analysis can be used to anticipate potential price movements based on the collective wisdom, or fear, of the crowd. By recognizing these hidden patterns and signals within vast data sets, ML algorithms can provide traders with a significant advantage, even in a market where past price data alone is not enough to guarantee success. Section 5. Conquering the semi-strong form with real-time analysis. The semi-strong form of the efficient market hypothesis presents a significant hurdle for traditional investors. It states that all publicly available information, such as news releases, earnings reports, and economic data, is immediately reflected in stock prices. This makes it extremely difficult to gain an edge through fundamental analysis, as any insights gleaned from public information are already priced in. However, machine learning algorithms, with their ability to process and analyze information in real time, offer a powerful solution. These algorithms can continuously monitor news feeds, social media, and other data sources, instantly analyzing the potential impact of new information on stock prices. For example, imagine an earnings report released before the market opens. An ML algorithm can instantly analyze the report, comparing it to past performance and analyst expectations. Within milliseconds, it can assess the potential impact on the stock price and execute trades accordingly, capitalizing on the information before human traders can even react. This real-time analysis capability allows ML-powered trading systems to react to new information with unparalleled speed and efficiency, potentially outmaneuvering human traders who rely on traditional methods of information gathering and analysis. Section 6. Unveiling hidden signals, sentiment analysis, and the strong form. The strong form of the efficient market hypothesis posits that stock prices reflect all information, making it impossible to gain an edge even with insider information. Sentiment analysis, a subfield of AI, analyzes text data like news articles and social media posts to gauge market sentiment. Understanding collective sentiment helps investors gain insights into potential market movements. Machine learning detects subtle sentiment shifts, providing traders with a valuable edge. Section 7. Empowering retail investors, leveling the playing field. The rise of machine learning and artificial intelligence in stock market trading is not just beneficial for institutional investors, it also presents a significant opportunity for retail investors to level the playing field. Traditionally, retail investors have been at a disadvantage compared to their institutional counterparts, lacking access to sophisticated tools, vast datasets, and lightning-fast execution speeds. However, the increasing availability of affordable machine learning-powered trading platforms and tools is changing the game. These platforms offer retail investors access to data-driven insights. Machine learning algorithms can analyze vast datasets, identifying potential trading opportunities that would be impossible for humans to spot. This empowers retail investors to make more informed trading decisions based on data, rather than intuition or emotion. Real-time analysis. Machine learning algorithms can track market data in real time, alerting investors to potential opportunities as they arise. This allows retail investors to react quickly to market movements, capitalizing on short-term price fluctuations. Adaptive technology machine learning algorithms continuously learn and adapt to changing market conditions, ensuring that their trading strategies remain relevant and effective over time. By providing access to these powerful tools, machine learning and artificial intelligence are empowering retail investors to compete on a more even playing field with institutional investors, democratizing access to sophisticated trading strategies and insights. Section 8. The future of investing, embracing the AI revolution. The integration of machine learning and artificial intelligence into the stock market is still in its early stages, but its impact is undeniable. As these technologies continue to evolve and mature, their influence on the financial markets is only set to grow. The future of investing will be shaped by those who embrace these advancements, leveraging the power of machine learning and artificial intelligence to gain a competitive edge. By understanding the capabilities of these technologies and incorporating them into their investment strategies, investors can navigate the complexities of the market with greater confidence and potentially achieve superior returns. The use of machine learning and artificial intelligence in finance is not without its critics, with some expressing concerns about potential biases within algorithms or the risks associated with automated trading. However, these concerns should not overshadow the transformative potential of these technologies to democratize access to sophisticated financial tools and empower investors of all levels to make more informed decisions. As we venture further into the age of artificial intelligence, embracing these advancements will be crucial for anyone looking to thrive in the ever-evolving landscape of the stock market.